Hello, hello. It's proper. Hello. We'll begin. Ladies and gentlemen, good evening to you all. On behalf of Captify Consulting, the investor relations partner of Royal Orchid Hotels Limited, I welcome you all today to the Q4 and FY'25 analyst meet of Royal Orchid Hotels Limited at Iconico Hotel, the newly launched hotel by Royal Orchid, an upscale lifestyle 5-star hotel right next to T2 Mumbai International Airport. Before I begin, I would like to update you that Mr. Chandrabalji, CMD, would not be able to join us physically for this event today due to a last minute development which required his urgent presence in Bangalore. However, he will be joining us with a message virtually for a brief while. In person from the management team, we have with us Mr. Arjun Balji, President, Mr. Keshav Balji, Non-Executive Director, and Mr. Amit Jaiswal, Chief Financial Officer. In 1973, a young man at the age of 24-25 came from Shimla to Bangalore and started Harsha Hotels when there were very few hotels in Bangalore those days. This also had the most happening Indian restaurant introducing Chane Bhature, a mouth-watering oil soaked North Indian delicacy which was never there in Bangalore before. To make it authentic, his mother came from Shimla to teach the chefs how to make authentic chana bhatura, sarson ka saag and makki di roti, and that's how this journey started. In 2001, he launched the flagship hotel, Royal Orchid Hotel Bangalore, and today ROHL has more than 115 hotels and nearly 9,500 plus signed rooms in its portfolio. Ladies and gentlemen, I now invite Mr. Chandra Balji, Chairman and Managing Director, Royal Orchid Hotels Limited, to give his opening remark through video conference from Bangalore.
Dear friends, good evening and a warm welcome to all of you. It is a pleasure to be with you, not just to present our numbers, but to showcase what the future of Royal Orchid looks like. And I can't think of a better venue than where you are seated right now, our flagship property, Iconica, Mumbai. This is just not another hotel. It's a landmark in our evolution. 292 rooms, located just 10 minutes walk from the Terminal 2 of Mumbai International Airport, executed start to finish in just under 12 months. But more than speed, it's the intelligence and modernity of this hotel that we are most proud of. Iconica is a technology-first experience. Every room features a dry cleaning and a steam ironing closet, making it the first hotel in the world to offer such a facility. A Blue Tokai coffee pod machine for premium in-room brewing, intelligent lighting and automation systems, and a rooftop party pool, a new lifetime addition in the heart of Mumbai's airport corridor. This is where design meets forward-thinking hospitality. Growth, consistent and disciplined. In FY'25, we added 14 hotels, contributing 963 rooms. In Q4 alone, we opened 3 properties with 226 keys. With this, we now operate 115 hotels, totaling 9,583 keys including signed properties, across 78 plus destinations. Looking ahead to FY 2030, our vision is bold but grounded. 345 hotels, 20,000 plus keys, a sustained return on capital employed ROCE of 25% plus. This is a clear, focused roadmap backed by brand clarity, asset-light strategy, and operational efficiency. Now I'll come to financial highlights of FY'25. Q4 FY'25 revenues were 92.34 crores, up by 12% year on year. EBITDA of 25.52 crore rupees, up by 7%. PAT before exceptional items were rupees 13.15 crores. The Y-on-Y PAT decline is explained by two factors. We have renewed the lease of our flagship Bangalore hotel for 2.6 crores, securing it for a period of 30 years. Number two, a 6 crore deferred tax credit last year after requiring Icon Hospitality Private Limited, which owns Royal Orchid Central Hotel on MG Road, Bangalore. That's it. Okay. Now, full year results for FY'25. Revenue 343 crores, growth of 10% over the previous year. EBITDA 96.8 crores as compared to 95.16 crores, showing a growth of 2%. PAT 47.5 crores and EPS 17.23 rupees. Notably, PBT rose 5.5% Y-on-Y and cash profits continue to be strong and stable. A new initiative, intelligent hospitality powered by AI. Alongside expansion, we invested heavily in making our operations smarter and more predictive. AI-based guest chatbots for 24/7 support. AI-edited wedding video solution for faster turnaround and better experience. AI-enabled revenue dashboard that dynamically manage pricing and demand. Live guest feedback monitoring that flags service issues in real time. These tools are creating tangible results not only in efficiency but enhancing the overall guest journey. Inclusion through innovation. We have redefined what it means to be socially responsible. This year, we have partnered with Globotrix, bringing AI-powered clubs to our properties that help deaf and speech-impaired staff to translate sign languages into speech. Then the other company we're working with is Orchid, whose AI-enabled smart mobility tools enable us to hire visually impaired employees and enable them to read. For us, CSR is not just a contribution, it's integration. We are building a brand with accessibility, where accessibility is operationalized, not tokenized. Now we have introduced another thing called Regenta Rewards, Loyalty Redefined. Now let me take a moment to talk about one of our most powerful initiatives this year, the Regenta Rewards program. We have invested 57 lakhs on building a fully digital fully automated loyalty ecosystem is not just another hotel point system. Here how it stands apart. Seamless enrollment and redemption, accessible via apps or website. Automated tracking of stays, spending, and preferences. No manual intervention. Points that can be redeemed not just for stays but also for in-room dining and upgrades. Planning for real-time integration with our PMS, property management system, and CRM, customer relation management, ensures personalized offer and dynamic targeting for every guest segment. More importantly, the platform is built to scale with AI, so over time it'll get better at anticipating guest preferences, increasing repeat bookings, and driving lifetime value for guests. Loyalty for us is not an afterthought. It is a strategic engine driving both top line and retention. In closing, in summary, we have delivered steady financial and operational performance. We have made investment in future forward technologies. We have based CSR that's inclusive, actionable, and measurable. We have launched one of the most advanced loyalty programs in the Indian hospitality industry. With 345 hotels, 20,000 plus keys inside, we remain focused on building a hospitality group that is sustainable, scalable, and truly future ready. Thank you once again for your continued trust and support. We are excited about the road ahead, and we are glad that you are on it with us. Thank you.
Thank you, Mr. Balji. The detailed investor presentation post the results were uploaded to the exchanges on 17th Feb. Today, we've uploaded an analyst meet presentation where we're going to talk about the vision and the plan for 2030. I will now request Mr. Arjun Balji, President, Royal Orchid Hotels Limited, to come and present us on the same. Arjun.
Thank you. Oh, lovely. Thanks, Vinay. I really don't know what to say, considering the fact that my father's pretty much said everything that I had, but let me try. Okay, so we have a disclaimer here that's supposed to be out there. Let me start with, listen, good evening, everyone. Now, the last couple of quarters, we've been dangling this carrot of Iconica to all of you, right? And today we're delighted to have you here, preview this hotel, tell us what you think, and really look at this as the new way for our company forward. So over the next few minutes, what I want to do is run through the evolution of the company, obviously our journey, where we are today, what our plan is for the future. And really the question you all will ask is, how will you get there? What is the plan and what is the strategy? So I want to demonstrate that to you guys a little bit. And then, of course, we'll open it up for questions, and my brother and CFO are both here, and you can badger them while I run away, right? So we started from 2001, where Royal Orchid Bangalore really started. And that hotel in itself had a number of firsts. But since then, we've prided ourselves into being an Indian hotel company for the Indian consumer. And that has been a core pillar of who we are. That's our core DNA. And that's something that we've done, across how we've grown. We've grown fast. We've built hotels. We've created a slew of hotel opportunities, 115 of them. And over the years, we've added brands at ad hoc. We've had caterings, we've had F&B, we've had a whole bunch of things, but it was all opportunistic, right? Today, with 115 hotels operational, a pipeline of 40 plus hotels, upgrades in technology, people, design, process, we're actually looking towards the next phase of growth. So where are we? We are within touching distance of 10,000 rooms. That's a nice little magical number. And with a little more effort, I think we will get to those 10,000 rooms. We are a diverse hotel company. We cater to business, leisure, wildlife, weddings, anything that you want. Right? We kind of cater to that. But over the years, customer preferences too have changed, and so must we. And for that, we needed a goal to aspire towards. And that brings us to Vision 2030. The Vision 2030 is very simple. It's 3x growth in 5 years. It's 115 hotels going to 345. It's sub 10,000 keys going to 22,000 keys. Lofty numbers? Well, not really. How will we achieve this and what will drive this vision? The 3 pillars: brand architecture, smart execution, and a constant look at the return on invested capital. That's it. These are just 3 simple things that we have to do consistently, quarter on quarter, to achieve our goal. Iconica Mumbai, where you're sitting, is a testament and really the proof of concept for how we are going to take this company forward. And let's take Iconica as the example. So we have a clearly defined brand architecture with this brand, right? Iconica is an upscale lifestyle product. The first thing we're going to do is obviously bucket our existing 115 hotels into the various brands, and I'll talk about those brands in a second. And the reason we're doing that is that as the market grows and as the market matures, you need specific hotel products and brands to cater to specific target audiences. And much like the larger brands are doing, we must too. Iconica, as I said, is one such of our brands, and this is our upscale lifestyle product. That gets me to pillar number 2. Pillar number 2 is execution. Over the last couple of quarters, you all have all asked me or asked us, when is the hotel opening? How long will it take? And so on and so forth. Now, just by show of hands, how many of you have renovated a home? Okay, so how long has that taken you, sir? 6 months? Okay, well, from start to finish, this product, we signed it in at the end of May. We took over keys at the end of June. We designed it by July and really got our team on the ground in August. We are now in May and we have 291 rooms, 4 bars, 2 restaurants, a conference room, and so on and so forth, ready and done. Shell to completion in under 11 months. The industry standard is 18 to 24 months. And that was done through meticulous planning, methodical execution, and an absolute keen eye on being below the estimated budget. And we're not talking about this, this is not something to be taken lightly because this is Royal Orchid Hotels going forward, right? And it required us to not just talk about it, but actually do it and physically show you guys where you're sitting that this is doable and we will continue to do it going forward. And the third pillar is return on invested capital. As you all know, and you must have seen our reports in the past and this quarter as well, among the listed hospitality stocks, we constantly rank among the highest in return on equity and in return on invested capital. This hotel too, without violating any rules, will continue that trend of 25% plus return on invested capital. So with these 3 pillars, we plan to go out and build the new brands. And our new brand architecture, and if you see those numbers, they're the hotel additions we're predicting going forward. But the numbers are very, they're fairly simple. There's Regenta Z, which sits at the bottom of the pyramid, all the way up to Iconica, which sits at the top. And among that, there's the idea of how we plan to grow each of these brands. all the way from franchise, which is least capital intensive or there's no capital requirement. It is a pure branding, technology, and audit play, all the way to hardcore involvement like this hotel today, right? This, of course, is a four-pronged axis, which has the most amount of revenue, the most amount of profit yields from the most amount of investment and effort, and all the way down to franchise, which is the growth brand and the flag-bearing brand that will go across the country. So with each brand, there is risk, there's reward, there's involvement, there's bandwidth, and we are human, and there is 24 hours a day, right? So sometimes we will falter, right? And we're grateful for the fact that you are patient with us and have been through the last quarters. With this, all I can say to you is that our prediction with our current signed pipeline, this is nothing to do with pie in the sky stuff. This is current signed confirmed pipeline. We plan to do between 550 to 600 crores in 2 years from now in top line, up from 340 today. And all I can tell you is that because this is the signed confirmed pipeline, the best years of Royal Orchid are ahead of us. So thank you all for coming. And I now invite Mr. Jaiswal and Keshav Balji on stage. And somebody to give us chairs, please.
So we'll begin the Q&A session. If you could just raise your hand so the person will come there to hand over the mic.
Yeah, my name is Sharat Chandra, and I'm an investment analyst. The question which comes to my mind, you showed that branding slide. If you can just put that up again on the board. Yeah, this one. So you have put in 5 categories, and there is investment and the amount of profit which you get. But in this whole 5 categories of names, these are not known names. See, Royal Orchid is the name, the mother brand, which is known to everybody. So how will I know Iconica if I drive from T2 to my house? I'll say Iconica, but I'll say, who's this? If it would have been Royal Orchid, Iconica, then something would have made sense. Because Royal Orchid is a name which has been there for last few years, and it resonates with us in the hospitality space. Thank you.
I thank you for that question. Out of 115 hotels, how many Royal Orchids we have?
No, I don't know.
13, 1-3. That's it.
But that name still comes to my mind.
It does, because the parent company is Royal Orchid Hotels, and that's who you're invested in. The reason why we are doing this, right, is wanting to now go ahead and spend on brands, because brands add value, right? As you said that Royal Orchid, you don't know Regenta, but there are 113 Regentas, 103 Regentas and 12 Royal Orchids. Okay, that is our fault, because we promoted the parent company and not the brand. And the reason we're putting this up here is to tell you that the path forward for the company, because there are no more Royal Orchid hotels that will ever come up. It's not going to happen, right? For reasons that I think you all know. But therefore, it is prudent that we promote Regenta, we promote Regenta Place, right? We promote, two other upper category brands. Now, to your logic of Iconica by Royal Orchid, let me give you a little analogy. Fairfield says Fairfield by Marriott because Marriott is a bigger brand and a more luxurious aspirational brand as opposed to Fairfield. Therefore, you always want a lower brand to be associated with a higher brand. In the same vein, it'll never say Ritz-Carlton by Marriott, right? Because you don't want Ritz-Carlton, the bigger brand, to be associated with Marriott, which is the lower brand, though Marriott is the bigger parent company, right? This is again from a customer perspective and not an investor perspective. So in the customer's mind, you always aspire to something bigger and better, right? At least that's our little 2-cent learning from Taj and Marriott and Hilton and Accor and whoever else. In that same vein, we could not have put Iconica by Royal Orchid because we have never built a hotel like this, right? And this is our flagship. As you go around, you'll see why it is our flagship, right? And it cannot be associated with, it cannot be a buy from a customer point of view. We want to create a new category, and it is a new category of hotel. Any?
But will this not lead to a lot of expenses in terms of promoting all these brands one by one?
So it will. However, we today in Regenta have 29 Regenta inns, right? And I'm certain that, it's lost on most people. Now, how do I create, what do I tell the customer? What does a Regenta inn stand for? And therefore, the idea was that, listen, if we were to brandify it per se, on a pure franchise perspective, you're effectively launching a brand, seeding it with 29 such assets, and there is a pipeline of more, right? The fact that there is scale already in each of these buckets, the expense would not be as much as one would think.
I'll just add to that. There's also synergy in what we're doing. So just, we mentioned the loyalty program, Regenta Rewards. That continues for the entire chain. So if you were to come to this hotel, you would be enrolled in Regenta Rewards. If you go to a Regenta Z, you'd be enrolled in a Regenta Reward. So across the entire chain, we're trying to, also have a common loyalty program. So there is some synergy there. The second thing is our sales team across the country is common and will sell every hotel. As we grow, that becomes more synergistic. Every time I add a hotel, that hotel can sell the other hundreds of hotels which are out there, and vice versa. So it gets more synergistic as we go. So your point about expenses of creating a brand, you're absolutely right. There will be an investment and not an expense of creating a brand. That's the way we are looking at it for the long run, because these brands will be, assets, and therefore we look at it. And of course, the investment will be prudent, but we just wanted to highlight that we look at it more as an investment rather than just an expense.
Thank you and all the best.
Hi, sir. Archana here from IDBI Capital. I have two questions. So firstly, beautiful hotel. Congratulations for unveiling a new brand. You're getting pretty, very optimistic target of reaching 550, 600 crore top line by FY'27. You can help us to understand what kind of operating matrices you have worked on to reach there would be helpful. And so secondly, if I look at the margins for us last 4 years, barring this FY'23, the margins have been pretty volatile. I do understand there would have been cost escalations. But then let's say, reaching at 550, what kind of sustainable margins we should look at operating level? This is my first question, sir.
Yeah. So if you really look at it, I given explanation in my quarterly results that why our margins were in last few quarters were flat. Okay. Because we were, post-COVID, we need to spruce up our hotels to sustain for next 5-7 years. So we have done some investment there. However, in the books, we have written it off. Okay. Not capitalized it. And as far as the growth in the numbers is concerned, this hotel itself will give us a top line growth of almost 100 crores. In this year, it will be for 3 quarters only. but next year it will be 100 crores top line from one hotel. Apart from that, we have given the footnote that we have signed few revenue share hotel, Goa, Gurgaon and Lucknow, which will add. So these numbers, what we are telling is a sure shot number based on the hotels that we have signed and which are coming up. Okay. We have not taken into consideration the during the year what we are going to sign and all those stuff. So we are pretty sure about reaching these numbers in 2 years' time.
Sir, but if you can help us, what kind of occupancy and ADR you consider to reach there would be slightly more helpful.
See, if you really look at our investors presentation, which I have uploaded in, few days back. So our ADRs have grown in Q4 as well as in FY'25. We have shown a good sustainable growth of our ADR by almost 8-9%. Okay. And as far as the occupancy is concerned, we are into mid 70s, like 73-72% occupancy, which we are pretty sure of adding into all these hotels, because all these hotels which we are coming up like Bombay, here average occupancy has always been 80% in all our competition hotels, you can check. And similarly, we are coming up in Gurgaon, which is also showing a very good occupancy. So with all this, I think occupancy will be somewhere around 75%. And ADR is going to grow because this Iconica will add to the ADR of the entire group, because we are targeting an ADR of around 9,000 rupees for this hotel. So definitely, there will be a good jump in the ADR also.
Sure. My second question is on Regenta rewards. Sir, you explained pretty well there. One of the peer was talking about taking the repeat business more than 40% by using this loyalty customer thing. So how we should look at what is the R base as of now of the loyalty customers, and how exactly we want to capitalize on this Regenta rewards going forward?
So, great question. Thank you. We launched this program about 5-6 months ago. We have little under 500,000 people who've registered for this reward program. We're already seeing, between 14 and 18% repeat usage on that. We are seeing a healthy burn and churn, earn and burn ratio there. Now, as the number of hotels, so, you can't turn on and plug it and say 115 hotels all have it, because systems have to come into each of those hotels. Staff has to be trained and all. So that's a process that's going on. So by the end of this year, we hope to have it across the entire platform. And the moment that is done, right, I think you will see, the entire shopping cartization, which is what our vision is, that you should be able to use your points that you earn with us, but you should be able to burn it to buy a pair of Levi's jeans for all somebody cares, right? So that entire system is already built and tested, and therefore you're already seeing 14 to 18% repeat business from there. What that does is brings down our cost of customer acquisition in the long run. So give this, I want to say, 12 to 24 months to see the true power of rewards. From a comparison basis, Marriott bought SPG, which is the world's most powerful hotel rewards program, and built that over a decade, right, to what it is today. Taj had to merge with Tata New and add the entire new platform customer base here to say that they've got 10 million customers. So by that base of metric, we're not doing too badly for 6 months.
So maybe if I can add one more question. So whatever the existing Royal Orchids hotels we have, will those be rebranded under Iconica, or those will be still under the Royal Orchid hotels?
They're going to continue under Royal Orchid today. This is a very different brand, a very different strategy. And obviously, as and when again, the third pillar was return on capital, right? So you have to very clearly look at, it's not a whim to stick a logo on top. It has to have a very detailed discussion on investing in that hotel. And only if that third pillar of return on capital is met, will the brand change. All three have to be met: brand, execution, ROIC. Without all three being met, status quo will remain. Thanks.
Hi, Amit Agarwal from Nuvama. My question goes to you, Keshav, and both of you. Actually, both of you, because this is the first time we're seeing you. We normally see Mr. Chandar Balji. So firstly, some background about yourself, where you've been before getting into this hotel business. And secondly, what is your skin in the game right now? Just coming to this business. Mr. Chandar Balji's been running the business. So as you go forward, what will be the changes which probably will bring about compared to the way the business was run today or structured today, whatever you might call it?
How serious or how funny do you want the response? You decide. Okay, well, well, listen. So Keshav and I have both, let's go back in time to Hotel Harsha. Okay. Every day post St. Anthony's and St. Joseph's Boys High School in Bangalore, if we didn't have tuitions, our source of entertainment was to go to Harsha Hotel and play at the telephone operator's cabin. Okay. That was growing up. So you end up growing up in a single 80-room hotel where you learn swimming and so on and so forth. Fast forward a bunch of years, obviously both our paths diverted in terms of what we want to do with our lives and skill set per se. He's the far more academic, knowledgeable, brainy one. I, on the other hand, have no such skill set. So I decided to go to the hotel school at Cornell. As we like to call it, the world's most expensive waiter training program. Okay. I worked at the Fairmont in Dubai, worked at the Four Seasons in Singapore, came back to India in 2003 and joined my father. We were two hotels then, Royal Orchid Bangalore and Hotel Harsha. We leased the Central, which became now the Royal Orchid Central, Central Park Hotel, and the Metropole in Mysore. Put those four hotels under one umbrella, rebranded it as Royal Orchid, and listed it on Feb 6, 2006 on the Indian stock exchanges. So that was the first bit of involvement. Fast forward a bunch of years, I set up Peppermint Hotels, which is a budget hotel platform. Oyo came and ate my lunch. That took its own, own sweet time of doing stuff. I consulted for the Tourism Development Fund in Saudi Arabia, set up a travel tech startup. And last year, before this hotel was signed, I was asked to come back to help with Royal Orchid 2.0. And it's been a fascinating journey because I think India's had a great inflection point on hospitality, and we'll see how to take this company forward. Both of us have been hidden from view by my father intentionally, and I think it's about time that is he on Zoom? If he's on Zoom, he'll kill us for saying this. But
thanks for that question. I'm nowhere as humorous as he is, so I'll keep it brief. Actually, we haven't really been not participating in the calls. I mean, if you look at any of the videos of the last at least 8 or 7-8 quarters, I've very much been part of all the Zooms, and I've been on the board for almost 5 years, and so been very much part of the strategy and the planning from the board level. I sit as a non-executive director currently. My background is I did my undergraduate at the University of Pennsylvania, where I did the management and technology program. So I'm a computer engineer, and I did finance at Wharton. I worked as an investment banker in Lehman Brothers in New York City, post which I did my MBA at ISB in Hyderabad. I joined the family business in 2007, worked till 2011, primarily as a person looking after development and growth. And of course, I did a lot of corporate related stuff as well. So it was around that time that we started management contracts and expanding on an asset-light basis as well. I subsequently started my own company called Spree Hotels. Did that for about 12 years. That was a budget hotel company, which was purely asset-light. Grew that, and I sold that to a listed company called Ease My Trip. some years back, just post the pandemic. Post which I run a real estate firm which basically builds villas in Alibag called Kensington Villas. That's the background.
Good deal on the.
Okay, my last question. So what will be, when you talk about 300 hotels, within, let's say, 5 years only, and 30,000 rooms, you're right now at 20,000, oh, sorry, 20,000 rooms. You're right now about 6,000 rooms only.
9,000.
Okay, that's addition. Yeah. So my question is, you're doubling in 4 years. So what's the strategy behind it? Are you going to be increasing your geographical presence, or in the same city put up more hotels? And how are you going to go about it in terms of brands also? Increase the number of higher brands going in? What's the strategy behind it?
So as we put the brand architecture, the 5 different brand categories, you got Regenta Z, which is your neighborhood hotel brand, right? It is budget, it's value priced, it is quasi standardized, and we want to grow that. So let's say Bombay, you can do, theoretically, you can do 50 of them. Right? I mean, you could, right? Wherever there's a, for lack of a better competitor, wherever there's a Bloom, you can stick one next to it. Okay. So it is an asset light strategy. There are 29 such inns today. We have a pipeline of another 10, 12 Regenta Zs that are already signed in the. So very soon, and mind you, this is the first time we're actually talking brand, right? In a forum like this, because we've got enough to seed each brand with, so that it's not just a pipe dream. Okay. So Regenta Z can very quickly become 50 to 80 hotels, right, on a pure franchise or manchise basis with assisted management, right, within the next, 6 to 12 months, very quickly. We see huge growth in that. It is not an OYO, it's not a Tribo, it's not. It's a step above, where it is a value-priced hotel brand that is actually built by hoteliers for the value price segment. It's not built by techie geeks for it. Okay, that's a first brand that, and therefore automatically there should be trust in the offering. Okay? The second pillar, which was Regenta Place, and in Jaipur we opened a really interesting Regenta Place a few months ago on a road called Sirsi Road. When we signed that hotel last year, it was a hotel, it was available, it was signed, and the owner was a lovely, lovely man who said, listen, I'll spend whatever you guys want. You find the interior designer, I just want to build this hotel. But we realized that the location wasn't a premium location. It's pointless making him spend endless money. But how do you make him spend money where the hotel has a unique draw in the neighborhood? So it's done a rooftop bar, it's done a really cool co-working coffee shop at the bottom. The rooms are modern, non-standard, and that became the foundation for what Regenta Place would be. So it's not budget, it's a step up. So it will have some F&B. Okay. Now, do we have hotels within us? We open what Dalhousie is a Regenta Place, again, modern, in the same vein. Right? This is all the last 6 months that I'm telling you. So we have these proof of concepts and proof of execution across these different brands, where franchise is the easiest or the quickest to grow, right? It's the least involvement, it's templatized, there's a brand book already created. Owner wants to sign a franchise. After he signs a franchise agreement, you give him a brand book, you give him the list of vendors, you give him the pricing, he can go and just bang it out himself. Right? It's that simple. So across, this wasn't an Excel exercise where you just take it and add a zero and pull the Excel down and suddenly you have random numbers. It wasn't done that way. It was actually done looking at pipeline. It was done looking at potential. It was done at what are the how many districts across the country? What's it, 560 districts or something like that, right? So how many of those districts? What are the hotels that are there that can be converted? What are the areas that there is development happening? So there's been a little bit of homework done to throw these numbers out.
Thank you.
Can you hear me?
We can hear you
Yeah.
loud and clear, sir.
I have few questions mainly on the business model itself. So there are some hotels which are on lease model, like they are leased hotels. Then there are some JV hotels. There there are some managed hotels, and then can you just explain the business model? Like what is the difference between across all this segment? And along with that, you also mentioned that there are some hotels which are in on the revenue sharing model. So can you give the percentage or how many hotels are from revenue share model?
Yeah, okay. So there is a split in our Excel in our presentation which actually splits up all our hotels by business model, right? So it'll be difficult for me to tell you that because it's a thing, but I would recommend it. But we'll try and
I
pull it
will
up.
just take that question. Okay, so we have 3 owned hotel. Owned means 100% owned by our company. And then we have, 5 leased hotel. Then we have 2 subsidiaries, which are again where we don't hold the entire stake. Although both the subsidiaries are owned hotel, but we hold in one 50% and in one 65% stake. And then we have, 5 revenue share hotel where we don't have any, fixed lease. It's called, percentage of the top line we have to give it as a lease rent to the owners. And then we have 75 managed hotel and we have around 26 franchisee hotel. Now, managed hotel, we get the percentage of the top line as well as the percentage of the operating profits. We get it as our management fees. And then there are 26 franchisee hotel where we get a percentage of the revenues as our franchisee fee. Hope I've answered your question.
One follow-up on that. Under the flexi lease model, in the previous con call, you stated that you give some refundable deposits. What are those for? Can you elaborate
See, in
on that?
flexi lease, what happens is the lease amount is not fixed. It depends on the percentage of the revenue what the hotel earns, and we give a refundable deposit of on an average 3 to 6 months of the lease rent what we have to pay. We calculate it on a projection basis and pay that as a refundable security deposit to the owner of the hotel.
Hello. Yeah. Thank you about that. And my final question is with respect to the Mumbai's Iconica Hotel. What is the capex did you spend on this?
Yeah, so here we have paid a 40 crore refundable deposit. Apart from that, around 15 crores we have to do the crockery, cutlery, and very small things, and the working capital around 15 crores. That's our investment.
Thank you.
Thanks. So my question is to both Arjun and Keshav. I know you're both bringing a fresh perspective to the opportunity, building on the legacy and the foundation. But also, I'm conscious that you are stepping up in terms of the premium nature, the branding, the kind of properties and the kind of investment. Are there any learnings from the past which will serve as guardrails for you going forward so that we as a group don't sort of repeat those mistakes? Thanks.
No, that's actually a very good question. Look, first of all, I think we are very much acknowledging the fact that this is an extraordinary platform. I think there are, like I said, 120 odd hotels operational. Think of the number of associates that work with us. Think of the number of, corporates that are associated on a regular basis, transacting with us, the loyalty customers. So I think for us, the most important thing is whatever we do going forward is to keep all those stakeholders in mind. So if we are premiumizing, it's because our stakeholders want a premium experience. They're staying, our customers are staying with us in certain locations and they want a premium experience from us. So therefore we're expanding to a premium, premium experience. If we are adding a neighborhood hotel, it's because that's what the market requires, right? I mean, like we used to have one Maruti 800 and that was the only car. And now if you look at the Maruti portfolio itself, there are SUVs, there are variety of different things. And I think that's essentially as the market expands and the opportunity grows, really ramps up, there are opportunities for us to really expand that. I also want to bring out one more point is that the opportunity by adding these new brands also grows manifolds. For instance, Um, if you look at the Marriott brand itself, they have a JW Marriott and a Fairfield right next to it. But if I just had a Regenta brand, could I put two Regentas next to each other? I could not. And these two also hotels don't look like each other, right? So we want a brand that fits also what people are building out there, and also we'd like to grow our share in each of the cities that we're in. So I think that's hopefully I've answered your question.
Yeah, no, thank you. That's very helpful for your detailed and candid thoughts. My final question is, you have an on-the-ground presence in a very large number of locations, which itself is a strategic advantage. So if you look at greenfield versus, let's say, brownfield or turnaround situations, will you be open to looking at properties in various locations, which may do with your management bandwidth, leadership? I'm talking of turnaround situations where you think things can be fixed, and that could be a
100%.
Okay.
100%. I mean, I think if you look at what India has given you or India has given us over the last few years, be it with government investment in creating new places. I mean, 10 years ago, did you ever think there'd be a Statue of Unity and there'd be crazy amounts of investment in that area? No, right? But we've got two, one open and one coming under construction. That's one opportunity. The second bit is, of course, you've got, to what you said about turnaround opportunities, investing in hotels that turn around. In a sense, the Metropole and these hotels that we took on government lease, right, were those opportunities that we did back in the day. Right? So we took an old hotel, we polished it up, and it's immensely profitable for us and for the government as well. So absolutely, right? I think when I was speaking, I said the key to us is that we are nimble, we're agile, we're opportunistic. But that third pillar, that has to be there all the time.
Just want to add one thing, sorry. Is that actually turnarounds and what we call conversions, right? In our terminology, these are existing operating hotels, and we come in with one of the brands, whichever the one where the fitment is right? And when we take this hotel, there's a process of upgrading it or and refitting it to our standards. There's a process of training the staff, etc., putting the technology, all of that stuff, and then plugging it into our system. That's a core part of what we have done. A large part of hotels that we add typically come as part of conversions, right? And that's, I think, faster for us, and of course has allowed us to expand the way it is. There's one thing post-pandemic, we have tailwinds in this part of, and I think we will continue to see tailwinds here. It's become very difficult for a standalone hotelier to, attract really good staff. We have a College of Hotel Management. We've got skill building programs. We've got, pan-India HR recruitment. Each of our hotels ends up becoming a recruitment center for any new hotel that we set up. So over a period of time, it becomes much more affordable and much more expedient for us to take over that hotel than for the person to run it themselves. So for us, taking over your hotel, let's say you're running a hotel, is a win-win. You probably make more money with zero effort when we take over your hotel, and we also earn a fee. So that's really how we've been able to grow our management business so fast.
Thank you very much, and congratulations again on Iconica Mumbai, and all the best to the entire team. Thank you.
Hello again.
Sir, Ramesh Bhojwani from Mehta and Vakil. First and foremost, your colleague or your PR Captify told us that we have to report here for registration at 4:15. It was an experience and a very pleasant experience. Registration came half an hour after that, but first half an hour we were treated to a hospitality which really in physically explain to us why Iconica is so correctly and accurately named, and the logo of a king's crown it's wearing. So it is very correctly, as you have put it, a really truly flagship, the top end scale hotel from your side, which is full marks to you. We had a very good view on in and around, and we are very pleased to see that this hotel is hardly a stone's throw from the international airport. So the thought which came to me was, is this a hotel dual purpose or dual utilization hotel for a business traveler as well as a leisure traveler? Would like to have your comments on this as a core business strategy.
Sir, absolutely. I think okay. Iconica, the brand, wasn't conceived to be an airport hotel brand. Let's put the first thing. Iconica is conceived to be an upscale lifestyle hotel that, oh, by the way, happens to have an airport in its backyard. That's how we are viewing it. Right? The airport is our neighbor and we're not the airport's neighbor. I mean, if you know that's for the king's crown and our ego is so big about it. But to say that, thank you for the credit that you've given the team at the back, for their hospitality. That's it's really nice to hear. From a business and leisure perspective, of course, this area, this micro market has become pretty big with business consumers because you've got BKC on one side and you've got another, massive convention facility down the road. You've got Andheri with all the business, and now multi-million square feet of office space coming up not too far from here with Waterstones and all of that. So yes, it is a convenient space to stay from a business consumer perspective. From a leisure perspective, I'll let my brother answer because he lives in Bombay.
Yeah, so I think, look, when you stay next to the airport, right? If you're coming to town for leisure, right? Even a lot of people who come for one night stays like to come, and stay at the airport. But a lot of the hotels are very boring and drab. So I think, have avoided that problem. So it's a bit more, it's a lot more fun. It's something that will draw in a customer a little bit more. So I think that's where we'll probably get more leisure. There's a huge amount of leisure stay that comes to the airport. First one is transient business, just to clarify. Folks that come here for one night stays, right?
Yeah.
One night stay, the airport hotel is the best place. Right? You could come for pleasure, you could come for work, you could come for visa interview, you could come for this. Hundreds of things that you would come for, right? And Bombay being a city where I don't have to explain why people come. So that's really one major aspect. We found that things like NMACC at the Geo World Plaza have driven good amounts of bookings to the city. But lots of people from across the country come for that. I'll just give you one. That's just one example. There are hundreds of other reasons people come for leisure. We can discuss that all.
So just coming to the hotel for a second, right? We did the math that we found is that the average length of stay for somebody in this neighborhood is anywhere between 1.4 and 1.8 nights. Okay, that's the average length of stay. This hotel has multiple F&B. It has bars. It has a swimming pool. It has a nail bar. It has salon. This, that, and the other. Multiple offerings within the premises, and the hope is that you would not see and experience everything on the first time you come and stay here, right? And therefore, the hope is that you'd want to come again. Within the room, as we stated, this brand and hotel was designed by first putting the customer and the pain points of the customer up front. Yes, we had fun while we were designing it, right? To say that you walk into a bar and not a lobby, that was us being cheeky. But let's go back to the pain point. You come into Bombay to go to a meeting and you need your shirt ironed and you need a jacket ironed, right? You have two options, right? You get an ironing board, try and do it yourself, or you send it down to very expensive laundry who may bring it on time or may not bring it on time. The fact that we are the world's first hotel to invest in that laundry closet in every room, all 292 rooms have it. The smallest to the largest, it is there. And in 20 minutes, your shirt or your jacket or your sari or your salwar kameez comes out almost brand new, or actually brand new, refreshed. Okay? That's a pain point solved. The other thing is, how many times you go to a hotel and they say, so what did you consume at the minibar? Well, I ate a packet of chips. Okay, fine, let's go and check. I mean, for the small, we're like, listen, this non-alcoholic minibar is included in your room stay. Please eat the chips. We actually don't care. Eat it. So it's this pain point of when a customer comes in, how do you ensure that he's coming, he's enjoying his stay, we're charging him for it, but we're not irritating him with different things along the way, which we've run enough hotels to know and get feedback on, what have been their points, right? And we're trying to eliminate all of that here.
I think it is very innovatively and incisively thought out strategy. And you have rightly mentioned that you are expecting an occupancy of 80% plus, but with the business traveler, I see it going beyond 90%.
Thank you, sir.
Hopefully,
Inshallah.
all the best.
Yep, buddy.
Yeah, hi, this is Hitesh Jain from Avagra Capital. So I think you all mentioned you all expect 100 crores from this property as top line,
Full year.
full year. By when, sir?
No, like this year we will get for 9 months. Okay, this year we'll get for 9 months. So it will be around 75 crores. Next year, full year, we'll get 100 crores.
If you could explain the economics, I think you said you've given 40 crores as deposit and 15 crores for others. So when do you expect break even? And I mean, if you could just explain the.
See, as far as break even is concerned, I think in the first quarter itself, we will be having profits.
Okay.
As far as our investment is concerned, this 40 crore is refundable over a period of time. So we will be deducting it from the rent, what we'll pay to the owners. And our 15 crores, I think, I'm expecting that second year itself, we will recover our investment.
Okay, thank you.
Yeah, just a follow-up question. You are in the PPT, you mentioned that your FY'26 guidance for revenue is 450 to 480 crores. How much organically are you planning to grow?
Around 10%.
And can you give any particular guidance with respect to ARR and rev?
Right now we have already sitting for the financial year 25, our ARR is around 6,137. I've given it in my PPT. So ARR growth will be around 5-6%, 5 to 8%, not more than.
Clearly, we've done an amazing job explaining it to you, or we've confused the living daylights out of you. Whichever way it is, Vinay, last.
Mr. Amit wants to ask something. Let's give the mic to him.
Just one last question. What I've found, and correct me if I'm wrong, Amit, your focus is more on room rentals rather than F&B, because if you take a ratio of room rental to F&B, F&B is relatively much smaller compared to, let's say, other branded hotels. So, Mike, I'm not talking about, a couple of them who just don't look at F&B at all. So my question is, with Iconica coming in, moving up the brand ladder, let's say, are you looking at improving the F&B also in terms of the ratio of room rental to F&B?
Absolutely. And so if you look at our current portfolio, a vast number of it falls in the 3-star-ish category, right? And with the advent of standalone restaurants everywhere and Swiggy and whatever else, people really aren't going to 3-star hotels to go and dine at their coffee shops. Doesn't happen. It's up the value chain that people go and dine at the hotels, and room guests also dine at the hotels. This hotel has 3 bars, it has 2 restaurants, it has Bombay's first, I want to say day club or restaurant on the rooftop, where we'll allow the guest who's dining at the restaurant to use the pool. So it's not inclusive. It's not, the pool is exclusive only to hotel guests. Right? So we want to try, and as you go around seeing the hotel, you see we've tried to maximize or create interesting F&B spaces around the hotel for varied experiences. There are a bunch of small meeting rooms and party rooms that people can take. And there's a conscious effort that will be done by the sales team to go out and attract even the smaller groups, right? And how do you make them, enjoy the hotel across the board? Right?
Just one thing I want to clarify is that actually our DNA is in food and beverage. So my grandfather started off with a restaurant called Balji's in Shimla. And that's really how the entire thing started. So the other thing that while we do have, I mean, I think as we've grown, we've obviously added a lot of hotels which are sort of more city-like. But if you notice our investor presentations in the last many years, we focus a lot on weddings as well. And I think what has not been disrupted by Swiggy and Zomato and all those things, thankfully, is weddings. In fact, post-COVID, people have been spending a lot on weddings. So our focus has been to drive business in a lot of our hotels through weddings, and that's how the F&B is actually at a fairly healthy ratio. I'd actually surprised
No,
that you give it.
I would
So,
like to add
yeah.
to your question. See, if you see our slide number 36 in our investors presentation, out of a total 343 crores of revenues, our room revenue has been 182 crore and the F&B revenue has been 125 crores. So it's a fairly decent, 60-40 kind of thing, which I think is a fair if you compare with others also. And as far as F&B is concerned, as Keshav rightly said, that you need bigger banquet halls to do more weddings. So that's how our focus has been. And this ratio, I think it's at par with any bigger chain if you look at it. Thank you.
Any more questions? Since there are no further questions, we'll end the discussion here. Post this, you're free to interact with the management and do join us for another round of hospitality with some fish food created at the restaurants of the hotel. We also have optional hotel tour. So anybody who wishes to do that, we have our team out here. You can go with them in batches of 4 or 5 to take you around and show you the hotel. Thank you so much. And thank you to the management team.
Request everybody to have the dinner and bless us with your presence here. You all are very thankful to all of you for taking out the time and coming and seeing the hotel. Thank you.